Hi folks, this is Sector. Welcome to a new video of my forex trading course. In this video I want to be talking about trade plans, what a trade plan actually is, how you go about developing your own trade plans, what elements should you take into consideration when it comes to develop your own trade plans for your own trading setups, etc, etc, okay? For that, what I'm gonna do is I'm gonna record two setups, okay, or actually two trade plans for two setups that I'm looking to trade myself today. What you're watching right now is my live screen. I'm gonna be showing you two setups that, like I say, I am looking to trade myself on my own account. I thought it would be a good idea. You will have, you get a clearer picture. If you saw two real examples, okay, of two of my trade plans, rather than if I just lay out the theory, alright? So I'm gonna be showing you, like I say, two of them. The first one is the euro against the Canadian dollar on the 4 hours time frame. Okay, which is the chart you're looking into right now, and well, let's get going. All right. Every trade plan should have or should check different elements. Okay. The first of all, of course, is always the trend. Am I trading? Are we trending? Okay, or are we moving sideways? Am I looking into an uptrend and therefore do I want to search for long entries, perhaps a downtrend for short entries, or perhaps there is no trend at all, or there is a trend but it's not strong enough. Some of the three element conditions that I laid out on the first chapter, on the first video of this chapter, are being violated or they just don't apply, etc, etc. Okay, first of all, have a look at those moving averages, have a look at the trend. Is it a nice trend? Is it the trend you want to get involved with? Well, in this case, I reckon it's a pretty nice trend. I mean, all the moving averages pointing up, price spending most of the time on the right side of the 50 simple moving average, which is this one in red. Price nowhere near the 100, etc, etc. Okay, so. Yeah, it's a pretty nice trend. Okay, I reckon this is a trend I could try it. Second element: is there any news announcement coming out today? Okay, any news announcement involving the euro or the Canadian dollar? Remember that we are looking to try the euro against the Canadian dollar. Okay, so. I want to have a look into my economical calendar and see whether there is any news, I mean, any important, significant news coming from either Europe or Canada. I've already checked my economical calendar. There is nothing really important coming out today on either those two currencies. So, you know, I'm pretty safe that I will not be surprised by any crazy random price spike out of the blue, okay, due to the news. All right. All right, we've put that out of the way. Another element you always want to have a look at or into, as I explained before, is the longer time frames. What are the longer time frames? What do they look like? Okay, in order to do that, what I do is I quickly have a look into my daily chart. Well, nothing really here. The previous low was broken. We're making higher highs. Okay, sorry, higher lows, higher highs. So far, so good. We are in an uptrend. Let's now have a look into the weekly chart. Pretty much the same. The following, I mean, the next resistance level is right there, but you know, it's way too far above. It's like, well, 500 pips above. There's plenty of space to squeeze some profits here. So, you know, no, really, this previous level of resistance was broken already. This one, the one that I just showed you on the daily chart, also got broken to the upside. So, as far as the longer time frames, I see no particular contradictory signal. Okay, no conflicting signal on the longer time frames. So that's all right. Another. You know, we have the green lights as far as the daily and the weekly chart goes. Okay, next up, do I see any pattern that I recognize, any price pattern? Well, I don't want to get too much into price patterns. I explained all about price patterns on the chapter number 2 of this forex course. However, for the sake of accuracy, yes, I do see a pattern that I recognize. Okay, it's a range, sideways range, which is marked in blue in my screen, effectively formed by this double top and this double bottom. Well, that's. But like I say, I don't want to get too much into price patterns or how to try them. Okay, first of all, how to recognize them, and second, how to find a possible trading opportunity of those price patterns. In this case, I do see a price pattern. Okay, and I know what to do when I see these type of formations, because, well, like I say, I explained all about it on chapter number 2. What I will say, nonetheless, is that always when I see a congestion area at the end of the day, sideways price action, okay, horizontal price action, in an uptrend, the way I personally trade it is only if the breakout takes place to the upside, okay? If the congestion area breaks out against the trend, I will not consider that to trade that breakout, okay? But like I say, I don't want to get too much into that. I will let you guys dig as deep as you want into price patterns on the chapter number 2. Another element you want to always keep an eye on is where are my levels of support and resistance. All right. Well, my levels of support and resistance, significant support and resistance, of course, first of all, is this double bottom I was talking about. In this case, it's a 150-50 round number. All right. That's the key level. If this level breaks, to the downside, probably this uptrend will be compromised. Okay, I don't want this level to give way in this uptrend. If I see that price is breaking to the downside, I'm violating therefore this support level, I will consider that for the time being I might this uptrend might be in weakening. Okay, moreover, we have a clear uptrend. Actually, let me draw that properly. There we are. Okay, that's an uptrend line. Very rather clear uptrend line, which comes actually at the same level of this double bottom I was just talking about. All right, that means that, well, by any means, if the 150-50 breaks to the downside, I just don't want to get involved with this setup anymore, and therefore, my trade plan is to not get involved if this level gives way. Okay. Once again, the 150-50, this level breaks, then my trade plan is violated, and therefore I don't want to get involved with this trade no longer. All right. Another element you always want to consider, or you always want to write down on your trade plan for the day, at least as far as this setup goes. What type of price action do I want to see in order to consider getting involved with this market? Well, I just mentioned it. I want to see a breakout to the upside. Moreover, I don't want to see just a normal breakout. I want to see a special, a very particular pattern that I like to trade when it comes to trading sideways ranges, okay? Or rather, the breakout of those sideways moving ranges. But anyway, like I said, I don't want to get into that. That's all explained in detail in chapter number 2. However, what I want to see is a breakout to the upside. I just mentioned that any other type of breakout, or either if price continues moving sideways within those two boundaries, or whether the breakout takes place to the downside, the trade plan will be considered violated, and therefore, I will not be looking to trade the Euro CAD on the 4 hours time frame no longer. Okay, only if I see a breakout to the upside right there above the 152.00 level, I will actually be looking to push the buy button. Okay. All right. Another element every trade plan should have, into consideration is where will I place my stop loss and where will I place my target, my price targets. Okay. I talk all about stop losses and price targets on chapter number 4. Therefore, I don't want to overload you with the information. I just want you guys to remember that when it comes to before you actually pull the trigger, you must know where you will exit the trade, okay, or at what level you are looking to bail out of the trade. Both if it goes wrong, and therefore we're talking about your stop loss level, and both if hopefully it goes in your direction, and therefore we are talking about your price targets. Also, you want to already know before pulling the trigger, like I say, whether you're going to be exiting all the position at once or whether you are going to be exiting in 2 levels. As I explained, like I said in chapter number 4, on occasions I set a two-step exits. Okay, I take half of my position at one level, and then I bank half of my lot size at that level, and I let the second half of the trade, the second portion of the trade, run to a second target placed farther up. All right. So you always want to know where will you place your stop loss level, where will you place your first target, if there is any first target, and where will you place your final target. Okay. Like I said, I don't want to overload you with information. You guys will receive plenty of info about stop loss levels and price targets on chapter number 4. And finally, the time scope of this trade. Okay. How long do I expect or do I want to have this trade open? Is it an intraday trade? Am I trading a trade? Trading an intraday trade, meaning a trade based on, I don't know, the 30-minute time frame, the 1-hour time frame? Perhaps am I scalping off the 15 minutes or the 5-minute chart? Or perhaps am I taking a long-term entry of the daily, weekly, even monthly charts? I don't trade the monthly charts. It's just way too long for me. I don't feel comfortable trading such a long time frames. But anyway, I reckon some people do. And you always want to know how long. Just as you want to consider your price exits, okay? Both the targets and your stop losses, you wanna always keep in mind a possible time exit, okay? For example, if you're trading, if you're considering an intraday trade, and by the time your trading session, by the time the day has come to an end, you don't see price moving in your direction, your targets have not been met, or even price, it's basically moving nowhere. It's basically it's just not taking in your direction. You may want to manually close your trade. Why? Well, quite frankly, because you may be riding a momentumless swing. Okay, you always wanna keep in mind that if you are taking, for example, an intraday trade, that means that you should enter and exit the trade within 24 hours. Okay, within the trading day or within your trading shift. Okay. An intraday trade that by the end of the day has not quite either showed profits or a loss, or it's just going nowhere. Okay, let's say you take an entry and 6 hours later is still sitting at plus 10 pips, okay, or plus 15 or 5 pips, something that's not really significant compared to how long the trade has been open for. That means that you probably mistimed your entry, or the market has just lost momentum. There is no gas left on that setup, and perhaps you might want to be thinking to manually close your trade. In this case, this is a 4 hours time frame. All right, a 4 hours time frame setup. And therefore I'm gonna be looking to possibly stay about 24 hours within 1 and 2 days on this trade. Okay, no more than that. I don't want to keep this trade open for more than 2 days than 48 hours. if it, if it stretches out beyond the 48 hours time limit, I will have to reassess the situation, because like I say, perhaps I have either mistimed my entry, or the uptrend, this uptrend that you are seeing right now just doesn't have any more gas left. Okay, so always keep in mind how long you want to keep your trade on. If you're trading off the daily, perhaps you may expect to keep your trade open for a few days, 1 week, okay, perhaps 10 days, no more than 10 days. You don't want to stretch your trade for more than 10 days, okay. If you are trading off the weekly chart, you may consider a reasonable time span would be probably 1 to 3 weeks, 1 month maximum. You don't want to be positioned in the trade more than a month, okay? And conversely, if you're taking a trade off the 5-minute chart, if it's a scalping, scalp type of trade, aiming to squeeze, I don't know, let's say 15, 20, 30 pips maximum, that should be reached within 2 hours, no more than that, okay? 2 hours, as if you've timed up your entry properly, should be more than enough to as a time scope for a scalping type of trade, okay? More than that, I would be considering, like I say, reassessing the situation, okay? So, to wrap it up a little bit very quickly, you want to keep an eye on, you want to take note of the trend, whether there is any news announcement for the day, what's going on the longer time frames, is there any price pattern I recognize, where are my levels, my key levels of support and resistance. In this case, I already mentioned that these were my levels of support, and the 150.50, and these were my level, that was my level of resistance, the 152 down below. Those are the levels I want to keep an eye on, both for a possible breakout in direction of the main trend in order to search for entries, or if it goes against and it breaks my main level of support, both that level and this uptrend, well, the setup is valid no longer, and therefore I will cancel it. Moreover, you want to write down a small script of action you want price to, the type of price action you want to see on your chart in order to search for an entry. In this case, we already mentioned that you want to see a breakout to the upside. Where will you place your stop loss levels, okay, and your targets, and furthermore, whether it will be only just one target, or perhaps you will exit in 2 steps, okay? And finally, the time scope. How long do you expect this trade, or how long should this trade be open for, okay? And what's the time limit you may begin to, to want to consider to reassess the situation, perhaps manually close the trade, etc., etc. All right, that's the trade plan for the euro against the Canadian dollar. Now I'm going to show you the other setup that and following today. It's a possible short entry intraday type of trade. At the end of the day, this is the 30 minutes chart. It's a setup based on the 30 minutes chart on the USD against the JPY, meaning the American dollar against the Japanese yen on the 30 minutes time frame. Like I say, anything that's taken or is based on the 30 minutes time frame, in my opinion, is considered an intraday type of trade. So first of all, as usual, where is my trend? Is there actually any trend in place? Well, yeah, there is a trend. All right, have a look at that trend. We do have a little bit of a crossover there for 1 minute, okay, for 1 second really. Oh, actually, not for 1 second, it was for a few hours, but nonetheless, very briefly, a little bit of a crossover, but straight away it came back down in place. And also it's worth noting that at no time price violated the dynamic area of resistance, okay. This is the dynamic area of resistance, the area I'm marking right now on my screen, and as you can see, it's been holding price below at every swing, okay. So despite the fact of, that we do indeed see this small crossover there, I'm not overly concerned about it. Moreover, price is nowhere near the 100 moving average. All of them are pointing down, okay, in the same direction, parallel to each other, etc., etc. Like I say, the only little, glitch on this trade would be that small crossover, but it's not a big deal, okay? At no time the dynamic area of resistance has been violated, okay? So yeah, first element of any trade plan, the trend is in place. I am fairly happy with this trend. I can, safely search for short entries, okay? Then news announcement. Is there any news announcement coming, either the American dollar or the JPY for today? Yes, there is. Actually, there are some news. The inflation data coming today in about 2 hours. The inflation data coming from America, and that will, of course, have an impact on the American dollar. And I know that when it comes to, as we near that deadline, like I say, in 2 hours time, in 2 hours time, I don't want to be searching for entries at that precise time. If I see that I might be getting an entry at that precise time, I might pass. Okay, I might pass on the signal until the news are out of the way, until the dust settles down a little bit. And once the news are out of the way, I will continue on searching for an entry on this setup. All right, I've made a brief note about that news announcement coming out from America in 2 hours time. I want to always keep in mind that, so I don't get surprised by, like I was saying before, any random crazy spike on the chart that might knock out my stop loss within the second. Okay. Furthermore, what about the longer time frames? Well, let's have a look at the 4 hours time frame. Nothing there. Let's have a look at the 1 hour time frame. Daily time frame. Sorry. Well, the previous level of support, it was that level, got broken really. So the downtrend continues. Now, well, let's have a look at the weekly chart. Nothing really. I'm scrolling back for the last 1 year worth of price action. There is nothing there. All those levels of support, okay, all these levels of support have been broken to the downside. The trend is still in place. All right, it's fairly safe to search for short entries. So, I've checked the longer time frames. I know there is nothing, no conflicting signals on them. So, that's another plus, another tick on the list. Okay, any price pattern I recognize? Well, yeah, there is. It's a pretty prototypical swinging formation. I explain all about swinging formations on chapter number 3 of this trading course. So I don't want to, like I was saying before, I don't want to upload too much information. You guys just have a look at the chapter number 3, and you will get plenty of information as of how I tried this type of swinging. Have a look at that swinging price action. All right. Where are my key levels of support and resistance? Well, the key level, I've marked it in blue already. That's the key level of resistance above, okay? Right above us, around the 106.50. Moreover, we have the dynamic area of resistance coming around that level as well. So that's the key level to keep an eye on, okay, on this trend, at least for today. I always say it's very important to always keep in mind what's the key level to keep an eye on, okay, for the day, in order to determine whether the trade plan is violated or not. And that's to always draw the main level of support and resistance, and as long as that level is not breached, we are still in a trending scenario. The trend and the trend and the trade plan are both still intact. Okay, they are still strong, and we still have the green lights to search for trades. In this case, like I'm saying, is the 1 or 650, 1 or 660 to be exact. If price reaches above that level, if we break above that level, not only we break above yesterday's low, okay, moreover we break above the dynamic area of resistance. And therefore, we would be, the 100 moving average would come around that level, and we would be nearing that 100 moving average, which, as you guys know, it's a big signal of weakness. As far as I am concerned, as far as my system goes, it's the signal of warning, of weakness in any trend. Okay, you want to stay away from the 100, as much as possible. You want the dynamic area of resistance to hold price on the right side of the market, in this case, meaning down, meaning below, sorry. If that level, the 10650, 10660, okay, this level, that's my key level of resistance, breaks, if price breaks above, it might be a signal of weakness in this downtrend, and perhaps you might want to consider the trade plan violated, and therefore, you might want to pass on this setup, okay? Fine, now we know where the key level, the key support and resistance level for the day is, as we already mentioned, 10650, 10660. Moreover, what type of price action I want to see in order to consider an entry? Since we are looking into a swinging type of price action, what I want to see is a little bit of a retrace back, okay, to the dynamic area of support and resistance, okay? As you guys know, in a trending scenario, I always like to base my trades off that area. In my opinion, is the optimum area to join the trend, okay, to jump into this trend. And for the time being, right now, we are a little bit too far below. Okay, we're about 50 pips below the dynamic area. It's a little bit too far away, in my opinion. I don't want to enter trades that far away from that area. In this downtrend, okay, the perfect area to enter the trade, to rejoin this downtrend would have been, as you can see, around the dynamic area of resistance as usual, okay? It's always the optimum, as long as it's holding, okay? As long as it's holding price on the right side of the market, in this case, to the downside, of course, since we're in a downtrend, you always want to search for entries around that area, okay? Like I say, as far as my system goes, is the dynamic area of resistance is the optimum level to search for an entry. Right now, like I'm saying, we are a little bit too far down below the dynamic area. The dynamic area is up here around 1 or 650, whereas current market price is 1 or 611. It's about 40 pips away. I'd like to see price to retrace a little bit closer to that level. So the type of price action I'd like to see, like I say, is having seen this downswing completed, then a pullback, and search for entries around here. Like I say, I don't want to get into the actual entries. That's explained on chapter number 3. But anyway. Just as we saw, a nice swing down and then a pullback, in this case, another swing down, another pullback, another swing down and another pullback. Well, I want to see the same thing, alright? If it worked here and here and here, at the end of the day, technical analysis is nothing but, as I always say, analyzing the past, try to see recurrent price patterns, okay, recurrent events, and try to reproduce those events in the future. in order to profit from a similar outcome as we actually did in the past. Okay, so if we've been swinging down very harmonically throughout the last few days, I'm basically looking to trade the same type of a scenario. I want to see this last swing, okay, this swing I am marking right now on my screen. I want to see it completed. I want to see a healthy pullback to this dynamic area, and around that search for entries as explained on chapter number 3. That's the type of price action, the type of price script, okay, I want to see on my chart before I consider an entry. As usual, also I want to take note of where my stop loss levels will be, okay, where my price targets will be, and also, as I was saying before, will I be exiting at once, okay, the whole lot size at once, or will I split my exits in two, okay? That's explained, as I was saying, on chapter number 4. That's always important to keep an eye at what levels I want to exit this trade. And finally, as I was mentioning previously, what's the time scope for this trade, for this setup? If I eventually do get an entry, well, since this is a setup based on the 30-minute time frame, it's an intraday type of trade. I expect my entry and my price targets, or my stop loss, if things that don't quite go as expected, I expect them to be reached within the day, okay? Within the next 12, within the next 12 hours, okay? If I was taking a trade of the 1 hour time frame, I would stretch it out perhaps to 24 hours. Since this is a 30-minute time frame, I reckon that 5, 6, 8 hours, 10 hours, no more than that, it should be enough to reach a sensible target. Okay. If this trade remains open after 12 hours and not either the stop loss or the price targets have been met, perhaps it will be a clear signal that something is just not quite going as expected. You know, something is not quite right, and I might just want to exit out, lock out as many pips as I possibly can at that time, or perhaps just exit out at small loss. Let's say I am minus 10 pips, minus 15 pips. Oh well, that's trading. If this trade, once I get an entry, if it remains open for, like I say, 8, 10, 12 hours, more than that, perhaps it would be a good idea, it would be a wise trading decision to close out the trade, even if it's, like I say, at a small loss, in order to avoid a possible larger loss, okay? Or simply move a stop to break even. If you are already in profits, even if it's just 10, 15 pips, just move stop to break even, and that's about it. That's a whole lot of stress off your mind, okay? Okay, guys, recapping a little bit on this setup. First element of this trade plan, the trend. I have a clear downtrend. I want to be searching for short entries. Good. What about news announcements? Yes, I know there is a news announcement coming out in about 1 hour and 40 minutes from here, and I want to keep an eye on that. I am aware that we have news coming out at that level, at that time, of the day, and if I get an entry around that time of the day, like I say, I may want to not take that entry, okay? The worst thing that can happen is to take an entry, 15 minutes later, 30 minutes later, the news come out, they spike price to the upside, and knock out your stop loss within the minute. You don't want that, okay? You certainly don't want that. That's very frustrating. So, always important to keep an eye on the economical calendar for the day. What about the longer time frames? We've already determined that there is no conflicting signals at all. Everything looks all right on the daily, on the 4 hours, on the even the weekly chart. No levels of significant support or resistance right ahead of our position. Do I recognize any type of price pattern that I usually try? Yeah, as I was saying, I recognize the swinging type of pattern, which is explained on chapter number 3. What about my the key levels of support on resistance for the day? I've already determined what's the key level for the day. The 106.50, 106.60 with the yesterday's low. Okay, actually it's a double bottom, right? I hope you guys can see this double bottom effectively forming like I say, the key level for the day, and also we have the dynamic area around that level. Should this level should price break above that level, the whole setup will be compromised. The whole trend will, weaken down, and therefore I may want to not take this trade anymore. What about the script? What about the price action I want to see? Well, we've already determined that what we want is to see this whole swing to be completed, see a little bit of a pullback, and search for entries around this level. Okay, search for short entries in order to exploit the next swing down. Okay. That's explained on chapter number 3, guys. Don't worry about it. Finally, what are my where will I place my stop loss? Where will I place my my profit targets? And what's the time scope I want to set for this trade in order to to possibly manually close a trade in case either my stop loss or my target price has have not been reached by the time the I reach the time scope deadline. Okay. Well, guys, that's basically all as far as trade plan goes. Like I say, it's a trade plan is nothing but writing down all the conditions you want to see on your chart before pulling the trigger. It's important to have all those things lining up, okay, all the ducks lining up in line before actually pulling the trigger. Once you've pulled the trigger, once you are in a position, you're in control of the situation no longer. Okay, it's up to the market to determine whether you will be given a profit or a loss. Okay, as far as a trader goes, as your point of view as a trader goes, what you can control is up to the up to the point when you press the buy or sell button. Okay, up to that level, you are still in control. Okay, you can decide whether you want to get involved or you want to sit out of that trade. Okay, up to that level, you are in control. Beyond that level, it's up to the market to decide, like I say, whether your trade is going to take some pips off your account or grant you with some pips, okay, with a reward for a work well done. So what you want to do is, up to that moment when you press the button, you want to make sure that you have all the different elements covered, okay, that you've taken into consideration, all the different elements, all the different important elements of the equation. So once you press the button, you know as a fact that you have the chances leaning on your side, okay, that you have the odds on your side. And well, if finally you score a loss, so be it. That's trading, there is nothing certain in trading, but at least you knew that you did your job, okay? You had a 60, a 70, perhaps an 80% on that setup to score a winning trade. And, beyond that point, it's not really up to you. What you want to do is up to that point to make sure you have everything under control. As much as you possibly can, okay? That's why you want to list out all those different points, all those different characteristics, elements I've been listing out for you on this video. Make sure all of them are ticked, okay? Make sure you have the green lights on all of them. So like I said, once you press the buy or sell button, you can sit back, relax, and know that at least as far as you are concerned as a trader, you've taken you've taken in consideration all the possible elements to make sure that the chances are on your side. All right. Alright folks, that's all for this video. As usual, if there is something you quite didn't understand about trade plans or about how to implement your trade plan, please don't hesitate to send me an email. Okay, trade plans are extremely important. Okay, it's extremely important to realize when your trade plan has been violated and therefore you don't want to get involved in that setup anymore. Okay. In order to cut down on possible losses before, like I say, before you actually pull the trigger. All right. So trade plans are crucial, guys. Every professional trader, believes me, writes down their a different trade plan for every different time, for every different trading setup. Okay, for every different trade they are looking to take, and they make sure all the key elements, like I say, are being ticked before actually entering the trade. But as I was saying before, if you have any doubt, if there is anything you didn't quite understand, feel free to send me an email. Okay, I will very gladly assist you as much as I possibly can. All right. Okay, folks, I'll be seeing you in the next video. Bye bye.